All right, let's talk about today's trade. Let me go to the daily chart. Let's look at daily, what's happening. So going into the day, honestly, I was bullish. And as you can see, although we have a bearish candle, we were bullish for the start of the day. So I marked these out the following Monday. And then I went down to the hourly chart. And when I posted in my group, I noted out this fair value gap over here. And I mentioned the day before that we will see some retracement. And this is the retracement. The retracement was, I think, 50% of the range. It was 50% of the range. And then from there, we used this fair value gap as support. Why this fair value gap? Because we already took it as support before and it should support again. You can argue that we took support on this fair value gap, but this one looks important to me. Why? Look at this. We took support on it again. This could have been another trade you took. This could have been another trade you took. So what I tell you, look at it and study it. Always go back on charts and see which fair value gap gives you the most amount of rejections. Why? Because in the future, when you come back on those fair value gaps, they will give you another trade. Look at this. If I was on the charts at the time here, 18 is the open, right? It went down and went up. Look at this range, right? We go back into this fair value gap here. Excuse me. Example in front of you, right? Just look at this rejection. Went back here. And now look at this rejection again. What is this move? 100 points move. So I feel like it will see rejection from this fair value gap and go down this time. Anyways, it's not important. Why it's not important? Because we're not talking about what's going to happen. We're talking about what already happened. So we open up around this candle when the candle was almost here. So what I mentioned was I said that we already took out London low, previous day low, and I want to see London high as my target. This is what I mentioned in my outlook. So I posted this picture. I said this buy side liquidity looks sus to me. This one, previous day high, we had Asia high before it, but these are stacked together, so I pointed these out as buy side liquidity, right? They are above London high in the middle of these two areas. So what happens is that market opens, I study it. I wanted to enter before London high, but it didn't give me the chance. My idea was that it will stop before London high, making an engineered high before London high, and it will come back into this opening range gap low or into this fair value gap one more time, or maybe into this area over here, so I can trade from there. But it did not. It just rushed up and took out London high. You can argue that it came back 50% of the range from here to here, which could be a fair trade if you do fib trading. I do fib trading sometimes, not all the times. But look at this. This could have been an amazing trade. No doubt about it. This would be treated as a breakaway gap, for example. And you target London high, which is 53 points. Honestly, $1,000, no problem. Or the fair value gap, which is the more obvious target, right? So let's not talk about it because I didn't take this trade. The trade I took was I had two accounts open. One was a MyFunded future. I'm testing it. They have a rapid plan. I wanted to see how it goes. And on my MyFunded future, I shorted from here, right? With the two contracts, I wanted to make $1,500. I took one partial here, one, and closed my trade around here. So that was in green, the one I sent in the group. And then the other one was, let me look at it because I can't really remember where I entered. Yeah, the other one was I entered on the retracement back over here. So my other was here. So what I did was I was break even at this point. And although I entered over here, I took a partial at this low and I took a partial on this low. Why? Because they are minis, not micros. So 20 points, 20, 25, 28 points, they give you around $400 to $500. So I secured $1,000 there. And then I got stopped out at break even. So that was one of the trades, right? Not bad. I have no problem with it. The second trade was, my idea was that, okay, we have this leg up and we have a retracement. So let's see, this is where I use fib. Let's see where is the 50% of the range and if there is a fair value gap there. This is really important. This is ICT gem. Put out your fib, see what is, if you're bullish, right? If you're bullish, see what is in the 50% of the range and below it. Is there something important at that area? What is important? There is an unmitigated 1 minute fair value gap. So the price will come back to it and show us some sort of rejection, which it did. So I entered over there. I entered exactly at that fair value gap, which was my second trade over here. And again, I think I put my stop somewhere here. I don't, okay, again, I always take partials along the way. I entered with 4 contracts. So my first partial was here. So I entered here. First partial was 20 points. My second partial was this high, 37 points. Again, I made another $1,000. And then I was here in loss. I didn't break even because my break even point was here. Go up, go up, go up. When I put my break even here, my other partial was here. It did not got hit. I moved my stop loss to above break even, below this fair value gap. I was expecting it to come into this fair value gap and just go back up, but it did not. It just stopped me out. So I made around 2,000 on that account as well. And these were the 2 trades that I took. Very precise, good trades. There was a reason behind it, and yeah. This is my second take of the video. The first one I made was very quick. It was like I was just throwing it away, so I wanted to make it again so I can explain more. For tomorrow, I'll just post my outlook. We have a new day opening gap this time, so we need to note that down as well.